But right now, Bitcoin's classified due to its volatility as a risk asset by most pools of capital. And so I'm not particularly bullish, say, for the calendar year 2022.
As inflation fears continue to increase, many experts are giving their outlook about what the general market situation will look like in 2022. For Lyn Alden, full-time investor and independent analyst, 2022 will not be a very attractive year for many asset classes. The founder and CEO of Lyn Alden Investment Strategy explains that interest rates hikes may not be a complete solution to getting things back on track. She adds that while rising inflation is calling for a hike in interest rates, many measures of economic growth are pointing in the opposite direction. Lyn also explains that many key industries are suffering from supply chain issues, reduced investments, and other factors that are affecting their growth. As a result of these key factors, Lyn does not see the 2022 calendar year being as attractive as previous years for U.S. equities, Bitcoin, and some other asset classes. Welcome to Savvy Finance. In this video, we examine Lyn Alden's outlook for 2022 for Bitcoin, gold, and other asset classes. On Bitcoin, Lyn says the cryptocurrency could still plunge below the $30,000 range before the year ends. We also take a look at her suggestion for investors looking to balance their portfolios in what she describes as a turbulent environment. Before we get into the video, please hit the like button to support our channel. Thanks. As she has stated in earlier interviews, Lyn explains that Bitcoin thrives better during economic accelerations, and the 2022 economic environment could not be further from this. Lyn adds that a similar thing has happened during all four Bitcoin bull cycles. As a result, Lyn believes Bitcoin could have more difficulties up ahead in 2022. In fact, she explains that in the event of a capitulation, Bitcoin could go lower than $30,000 in 2022. However, Lyn is still bullish on Bitcoin in the long term. She explains that it is attractive to different categories of investors from retail to institutions. In the meantime, she states that the current market situation is perfect for institutions, sovereign funds, asset management firms, and others willing to get in with large pools of money.
I think it's a good accumulation zone, but with the caveat, one thing I emphasized in that discussion was that Bitcoin's major bull runs historically, there's only a sample size of about 4 of them, but they 2011, 2013, 2017, 2020, those occurred during rising PMI environments, so economic acceleration. And so generally the type of period we're in now has historically not been great for Bitcoin's price action. Now, eventually you could get a decoupling, but right now Bitcoin's classified due to its volatility as a risk asset by most pools of capital. And so I'm not particularly bullish, say, for the calendar year 2022. My base case would be, kind of choppy action. Right now I would describe this as being a kind of a value bear zone where I think it's good for dollar cost averaging, accumulation, developing plans to accumulate for corporations or other pools of capital. I wouldn't describe this as being at capitulation levels. So we certainly, if you get some sort of market turbulence, you could have a capitulation similar to March 2020 or similar to the fourth quarter of 2018, where, as we talked about, the Fed was trying to still tighten into a declining PMI environment. If you get a capitulation like that, I would consider that a buying opportunity. I don't know if we're going to get that or not. So we certainly could see a break below 30,000 in that kind of capitulation type of environment. But structurally, I think looking at multiple years, say a 3 to 5 year time period, I'm still structurally bullish on Bitcoin when I look around the ecosystem. I look around what's happening on the Lightning Network. I look around kind of every cycle, the infrastructure gets built to absorb new types of capital. So first it was peer-to-peer, and then it was the early exchanges that didn't, had trouble getting bank access, and then it was the more regulated exchanges, and then it was the more institutional grade custodians and larger pools of capital coming in. And I think that trend is still intact.
Lyn Alden also talks about an outlier event that could change her long-term sentiments about Bitcoin. According to Lyn, the long-term fate of Bitcoin may lie in the hands of the U.S. or European governments. She explains that if the U.S. government, for instance, decides to ban the crypto, it could have a drastic effect on the growth of the coin, and this would not be in the short term. Lyn sees such an event affecting Bitcoin by at least 3 to 5 years. Lyn Alden also gives suggestions to investors looking to make the best of the current inflationary period. She explains that the solution lies in a thoroughly diversified portfolio with various asset categories. She states that her personal preference lies in the energy and other key industrial sectors that perform well during inflationary periods. According to Lyn, investors should also have Bitcoin, gold, and copper in their portfolios to stay ahead of the situation.
In a declining PMI environment, we're certainly open for a crash. So I don't rule out a crash. Like I said, we could get a capitulation. So I'm not like pounding the table right now. It's more like I think that the structure's in place. I think what would make it particularly bearish, like, one of the outlier events that I think would give you, say, a multi-year bear market would probably be if the US and or Europe did something extreme, like, say, cut Bitcoin off the banking system, prevent any sort of fiat inflows to exchanges. Other countries do that quite often. So China's been doing that. That's been a large impact in 2021. Nigeria did that. Now, Nigerians still heavily invest in Bitcoin, especially peer-to-peer, but they did sever it from their financial system. And so, for example, Nigeria doing that doesn't really affect the price of Bitcoin overall. But of course, if the United States or Europe were to do that, that would probably have multi-year implications. But that's kind of that tail risk scenario rather than a base case.
Today's video was sponsored by Mudrex. The cryptocurrency ecosystem, though rewarding, is complex and fast-changing. As a result, not many everyday investors can keep up with the fast-paced environment. Mudrex proffers a simple, quick, and easy solution to the problem. Imagine an automated investment platform that allows you to invest in various categories of crypto tokens. You continue to live your best life while Mudrex does all the work for you. No hassle, no stress. Just sign up for free. Deposit funds through debit or credit cards or bank transfer to begin investing, then choose your preferred asset category based on its risk ratio. It is simple, quick, and convenient. Mudrex has over 100,000 investors, $20 million assets under management, and a trading volume of $3 billion with bank-level encryption for extra security. The platform offers 3 excellent services for investors: Mudrex Coin Sets, Mudrex Mints, and Mudrex Algos. Sign up for free using the referral link in the description box for a $25 bonus. You also get rewards on referrals, cashback offers, and low transaction fees.
So Lyn, in the face of red-hot inflation, what is the best asset to own right now?
So I think I have a diverse approach mainly towards the commodity side. And so I think, if you look at what specifically does well in an inflationary environment, energy, for example, it's hard almost by definition. If you have inflation, you're getting inflation in energy and other key industrial commodities. And so I think that remains an attractive environment. Now, I think we've kind of come pretty far pretty fast, so I wouldn't be surprised to see periods of temporary softness. I think most indicators, especially with the economy decelerating to some extent, I think year-over-year CPI could start to peak potentially by the end of the quarter. Now, that if we get some sort of key energy shortage and we get a spike in energy prices, that could prevent that from happening. And so overall, I think my focus right now is kind of on defensive value. So things like energy transport infrastructure, MLPs, for example. I think their healthcare stocks are attractive. I think there's a variety of ways to get yield, and then having exposure to gold, Bitcoin, copper, energy producers gives you that upside if you get that more inflationary type of environment.
Do you see one having an advantage over the other, gold or Bitcoin, in an inflationary environment?
So I think that mostly depends on what economic growth is doing and then factors relating to them. So historically, in a risk-on environment, you'd expect Bitcoin to do better. In a risk-off, more stagflationary environment, gold would probably have the upper hand.
Bitcoin has been showing vast signs of improvement over the past few days. As of February 7, 1:00 p.m. Eastern Standard Time, the coin was just over $44,200, with a market cap of over $839 billion. If the upward momentum continues, Bitcoin could be on its way to surpassing Lyn Alden's expectations for 2022. However, one thing remains true with every institution that adopts and every country that legalizes or adopts Bitcoin. Bitcoin is here to stay. Every investor that puts in money will be doing their portfolio a great favor. Above all, before you invest in an asset, ensure you do adequate research and are properly convinced that it is the best move for your finances. Thanks for watching the video. If you like this video, please remember to click the like button. You can also check out our other videos on Bitcoin and other digital assets. Lastly, remember to drop your comments, thoughts, and observations in the comments section below.